Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Wednesday the 19th of October. Now we've had a bit of a kickback against the dollar, a bit of a risk rally the last couple of days, but how's that affecting the Forex charts? We're going to be looking at euro dollar, also looking at commodities with the gold price, and also looking on the equities side with SP500 futures. So starting off with this euro dollar chart where it sort of consolidated underneath the sort of 98 big figure area level of resistance, a little bit of a tick into that resistance now. I've got this band here, this purple band between these old lows and then subsequent reaction highs, and we've seen that sort of drifting into this resistance and then stalling. And look at that RSI back into the 50 area again. This is around where the RSI tends to start to sort of peter out in the recoveries. We've still got this long downtrend, and essentially this is a recovery within the downtrend. You've also got the 55-day moving average as well. Each of these rallies tends to falter around that 55-day moving average, and it just seems as though this is a rally into resistance. To be honest, it looks like it's going to be struggling and then likely to fall over at some stage. It's still got a little bit of uplift in it. It's just consolidating this morning, holding on to 98 big figure as an initial line of support. You can see that little near-term pivot there with these old highs breaking out became supportive. But essentially, I still look at this and think, well, this is likely to be a chart that just starts to fall over, likely to be producing another lower high underneath this reaction low of parity. That was pretty much bang on to the pip parity, that reaction high. And you're likely to see a lower high under there now with the 55-day moving average. So it looks as though this is going to be a rally that gets sold into once more. Back under 98 big figure, as I said, on this 4-hour chart, you start to lose that support, and that starts to sort of turn the market lower again. Back underneath 50 on the 4-hour chart as well would be sort of signs of turning lower once more. On the gold chart, what we've seen is this this pivot area at 1680 broke to the downside and then became resistance. These are old lows, and then, as I said, pivot with these subsequent highs, then got broken. But back underneath that, we're now seeing that as a negative bias once more. And that resistance came in and subsequently fell over last week. It's been consolidating. It's a bit of a choppy move in the last few days, but essentially falling over. And you look on this 4-hour chart, you can see that we are actually pretty much now forming a new downtrend. It's quite a sharp downtrend, near-term downtrend on the 4-hour chart, but still something to maybe keep an eye on. It's consistently failing around that 50 level on the 4-hour RSI as well. So it just looks as though it's going to be coming back to test that reaction low of 1640, breaking underneath that. You're looking at 1615, and essentially you are just continuing this run of lower highs and lower lows, and then subsequently coming back to test that reaction low in the consistent negative outlook of this gold chart, and just playing out for the consistent and continuing dollar strength, which weighs on the gold price. And finally, on S&P 500 futures, well, we've seen a bit of a choppy move in the last sort of week or so, but the two strong candles in the last 2 days really have sort of improved the outlook once more. They're very slight, only very, very slight positive divergence on RSI, nothing too massive, but still hints of improvement. And what we do see on this S&P 500 futures is the consistent, just throughout 2022, we can see these massive, obviously the big downtrend is in play, but you do see these runs where the market just rebounds quite strongly and quite quickly. So we've had that on several occasions actually. Obviously the big one was between sort of June into sort of August time, then selling off. But what we have is the scope for this to happen again, and I've got this downtrend in here, just come in one more level here, this downtrend of the last sort of 8 weeks or so, 8-10 weeks, and we could see a return to that downtrend. Obviously what we have is this resistance that comes in around the 38.20 mark. That is the next important line of resistance. How the market reacts around that will obviously be important, but essentially we still see, I think, room for this recovery. RSI has improved and up towards 50. It suggests that this 38.20 mark is a bit of a line in the sand. If it can break through that, it really does see that the market could be then swinging decisively higher. But essentially, we've still then got resistance overhead 38.70, 39 figure area, 39.40. And again, it's all sort of playing out within the bigger picture downtrend. So these are all near-term recoveries within the downtrends. Certainly, there is scope for that move to continue higher, but just essentially, it's just a near-term move into resistance. But it just depends on how far it can go. For now, it looks okay. It looks as though that the market is sort of building for this. Obviously, earnings season for the States is helping, but I think it's still just going to be a near-term move that subsequently then gets sold into. So with that in mind, I wish you good luck in your trading, and I'll speak to you soon. Thank you very much.